When it comes to electric vehicle maker Tesla, one of the biggest and most vocal bulls in recent years has been Cathie Wood. The leader of ARK Investment Management has been all over various financial media preaching her love for the company and its stock. However, despite all the positive sentiment, her firm has been selling Tesla shares in massive amounts recently. So other investors have been at crossroads about Tesla's stock because such activities about a stock's bull could mean something great is in the pipeline. But the question is, what should investors expect in the coming days? Should they be worried? That's what we're about to figure out. So sit tight and stay tuned. The stock is held primarily in three of ARK's active ETFs. We're talking about the Innovation ETF, the Autonomous Technology and Robotics ETF, and the Next Generation Internet ETF. Recently, ARK Invest launched a Transparency ETF that holds Tesla, but this is an index-based ETF that follows a specific index, and it's very small currently. The Transparency ETF doesn't make large daily allocation moves like the active ETFs do, so it's not really vital to the argument here today. For its active ETFs, ARK Invest sends out a daily email that details the firm's allocation trades. These are specific buys or sells in an individual name to change the stock's weighting in one of the six active ETFs. There are also position changes daily due to inflows or redemptions, but these aren't shown in the email. To see those changes, you have to track holdings consistently, which most investors can't. The Innovation ETF is known as the ARK Invest Mothership since it's the firm's flagship fund and contains about 52% of the firm's total assets under management. December 15th Tesla sale in this ETF was its 12th in the past 19 trading days, and ARK Invest also sold another 22,579 shares on that day in the other two active ETFs that hold the stock. This continues a selling pattern that started in late July, and ARK Invest hasn't bought Tesla on an allocation basis in any of the three funds since July 7th. Before counting any changes due to inflows and redemptions on December 15th, the three Tesla sales on that day would put Tesla's holdings in the active ETFs at about 1.9 million shares. At their individual peaks, these ETFs combined to hold more than 5.575 million shares, so this is a dramatic shift in sentiment for the firm. This means that the individual daily combined total peak for the three ETFs was more than 5.515 million shares. The massive Tesla sales recently are especially strange when you consider Cathie Wood's CNBC appearance. Cathie Wood was on the network saying how Tesla is undervalued, and she reiterated her $3,000 base case price target on the stock. That was when shares were around $1,050, and yet she sold shares that day and has continued since, despite Tesla shares falling under $930 during December 15th's trade before rebounding with the market after the Fed decision. Now, there are people who will defend Cathie Wood while talking about position limits in individual names. Well, ARK Invest actually removed these limits earlier this year, which previously allowed its ETFs to hold up to 30% in any one particular name. Tesla never had a daily ending weight of more than 13% in the Innovation ETF, so it's not like shares were ever anywhere near this limit anyway. Cathie Wood has a self-imposed restriction that prevents any allocation by any stocks that are over 10% in a fund, but there's no set guideline on when she has to sell any names. So now, what are the percentages that we have been mentioning today? We're bringing them up because they're related to ARK's Tesla sales. There will be those saying Cathie sold due to those limits, but the theory doesn't really hold water. Yes, Tesla shares have certainly rallied in recent years, but when you have a $3,000 price target on the stock, why are you selling under $1,000 currently? If you're that hopeful, why not just hold on to your shares until it hits the price target, or at least wait until it gets closer to the price target? Tesla was a 7.73% weight in the flagship fund as of December 15th. It's also important to note that until recently, Tesla had not been under 8.5%, yet Cathie Wood continues to sell shares even with Tesla's weight at its lowest point in at least 21 months. Previously, when Tesla got back below 10%, ARK Invest was usually quick to buy shares again. Over the past couple of months, about 860,000 shares of her reduced Tesla position have been due to redemptions in her funds as they've crashed from their all-time highs. We also believe that there are no major negatives coming up in 2022 that could make Tesla stock plummet. Tesla has many more positives than negatives coming in 2022. In fact, the only negative we can think of for 2022, besides Elon possibly selling more stock, is interest rates rising from the Fed. And the latter really isn't much of a big deal. We also don't think that Elon Musk will sell more shares. So why is ARK Invest selling shares? Is it because of Elon Musk? Elon Musk is at about 92% of total stock sales now to reach his 10% target of selling stock since his infamous Twitter poll. This will put less pressure on Tesla stock. After Elon is done selling his millions of shares, that selling pressure goes away, and the only selling will be people who decide just to sell Tesla stock. However, we're not sure why they would decide to do that with so many positive catalysts ahead. So let's look at what's coming ahead. Tesla will report on their fourth quarter deliveries on January 2nd, 2022, and that'll be a nice way to start the new year. We think that the delivery numbers are going to blow away estimates, especially since the EV tax credit did not get passed this year. Even though the EV tax credit didn't pass this year, there's still a good chance that the EV tax credit will pass next year, hopefully without the union subsidy, and that'll be good for Tesla, allowing people to buy a Tesla vehicle for $8,000 less than the purchase price. And it doesn't end there. Giga Berlin and Giga Texas are set to start producing cars in 2022. Barring some unforeseen and very unfortunate circumstances, we should start to see the first cars delivered to customers in January 2022. Now, we're not worried about Giga Texas having any delays, but Giga Berlin has been a giant mound of red tape and delays. Elon was hoping to start delivering cars in the summer of 2021, about 5 to 6 months ago, but delays and paperwork from organizations in Germany have derailed this. We do think the delays for Giga Berlin will end eventually, but if Giga Berlin doesn't start delivering cars in January of 2022, we won't be surprised. It won't matter. Even if it takes until the middle of 2022 for Giga Berlin to be approved, Tesla will deliver a huge number of vehicles in 2022. Giga Shanghai has a run rate that could reach 1 million vehicles in 2022. Tesla continues to expand the factory in Shanghai, China. By the end of 2022, we think it'll have an annual capacity greater than all of Tesla's production in 2021. That's a huge positive catalyst. In the end, Cathie Wood's actions regarding Tesla are quite contrary to the statements that she's made. The fund manager on December 15th continued to sell shares in the EV maker despite it already being in its lowest weight in her flagship fund in more than 400 trading days. Across the 3 active ARK Invest ETFs, the total holding of shares has come down by nearly 2/3, although a little less than a quarter of that decline has been due to redemptions. It was only recently that she called Tesla undervalued and reiterated a $3,000 price target, but her recent trading history tells a much different story. Well, you know that we'll keep monitoring the situation and update you with any new information, so watch out for more news. Remember to like, share, and subscribe. Thanks so much for tuning in. Stay safe, and we'll see you next time.